I welcome our distinguished guests and speakers to Middle East Africa Future Technologies Conference 2022. I would like to remind our guests that we will mute audio and video during the session. You can use the chat box below to ask your question. The speaker will answer questions in chronological order, and we will skip repeated questions. We will try to finish 3 or 4 minutes before the next session. The recording will be shared with you in the comments of the event on LinkedIn. I would like to welcome our distinguished speaker today, Maciej Bulanda. Maciej is a technologist and a humanitarian focused on innovating cash assistance programs. With blockchain-based decentralized finance, DeFi solutions. He worked on multiple DeFi-Aid pilots and studies across the Pacific, East and Southern Africa, South America, and the Caribbean, including the largest INGOs like CARE, Oxfam, Save the Children, and World Vision. Until recently, he was a co-founder and chief program officer at Emerging Impact. And previously, he worked for Oxfam on their award-winning unblocked cash project. He is an advisor, consultant, researcher, and board member of PositiveBlockchain Association. You are welcome to start, Maciej.
Okay, hi. Hi, everyone. Hello, can you hear me now? Okay, I'm just trying to share my screen, so I'm not sure if you can fully see it. I hope so. Let me just yes. Okay, so thanks. Thank you everyone for tuning in, and thank you for the invitation. It's a real pleasure to be here. So I will try to be quite specific in this presentation as per the invitation, and I'm going to talk about how decentralized finance solutions can transform development aid sector. So just gonna talk about the DeFi and blockchain, just to explain to the audience what we are talking about, and then how it's used in the aid sector, and we're gonna talk about 2 projects and have some spotlight on that, and then I'm gonna talk a little bit about where else you can learn more about those kind of projects. So what is decentralized finance, called also DeFi? A decentralized finance is this new technology, rather this ecosystem that is based on distributed ledger technologies, which are blockchain, and it's a global open alternative to the current financial system, with access for anyone. Yeah, and it's also it's an ecosystem of products and services that let you borrow, save, invest, trade, and more. So it's basically a full financial system, and it's based on an open source technology. Ethereum, one of the first blockchains, which are connected to many other protocols and blockchains, and the whole that's why it's called the whole ecosystem. So it's based on this open source technology, and also can be accessed by basically anyone who can also join programming of that. And so, in short, decentralized finance is this ecosystem that contains of blockchain, technologies, smart contract, which is part of the whole family of blockchain technologies, and cryptocurrencies, and in particular stable ones, which are called stable coins, which are one of the first, the original use case of blockchain technologies. So quickly, for those that are not familiar with the definition and the idea of what blockchain is, this is a shared immutable ledger that is shared by a network and owned by the entire network, and it has and it facilitates the process of recording the transactions and tracking assets in the network. And it has the four really key characteristics: that it's distributed, decentralized, so no one owns, there's no central entity that owns the ledger, but it's owned by the entire network, and it's immutable through encrypted through encryption, and it's also transparent. And what is actually important for me in my view, and in the context of this conversation and DeFi, is that blockchain can be is very multi-purpose. So transactions are happening not just on a financial terms, but there are many others, and you're probably heard of many use cases. So coming to the DeFi and what it is. So let's first just quickly talk about what are the problems with the current financial system. We have a lot of barriers in accessing the system, either to open bank account or just to use financial services, because they are too costly, and that creates the problem of financial exclusion. Governments or centralized institution can basically close down the market at will. They have the control over it. So there's a problem of trust often in the markets and in the system. The trading hours are limited. Money transfer can take very long time, and they are prone to human error. And then there is a whole sort of problem of additional fees and multiplying fees due to a lot of intermediaries in this system. So what is the solution of decentralized finance? So based on that definition of blockchain technologies, anyone with access to the internet can actually access those decentralized financial products and services, which promises to bring financial inclusion. No central authorities can block payments or deny anyone or access to anything. It's global and it's open all the time, 24/7. So it does not really discriminate or dominate, or it doesn't give sort of dominance of any market or any stock exchange, right? Like we have now. The transactions in that kind of ecosystem are automatic and rely on the code, and therefore they are much more safer, and whilst protecting privacy of parties. The system is more transparent at the same time, as anyone can inspect and scrutinize the code and the transactions. So then finally, the transactions, because of the whole automatization, are happening in much faster, in seconds or minutes, and the cost of all like blockchain based transactions, and in the DeFi space, transactions are really minuscule, and they are like fraction of cents often. So they allow for a lot of different use cases that were previously not possible, since basically there are no intermediaries, just basically sending money like through internet from one person to another. So what are the different use cases? So we have remittances, micropayments, microlending, savings, insurance, microinsurance, community currencies, there's quite a lot of use cases, and we'll get into that. So why this all matters for development aid, humanitarian aid sector. So we, drawing on those use cases where that has been tested or used, we see also already a lot of applications, such as cash transfers, and we'll talk about that later in the project spotlight. So cash assistance, which is the most dominant and form now of providing aid, or at least the most preferred, and the one that all the agencies are aspiring to, rather than in kind. That is basically a big use case, and one of the most interesting one in my opinion. Then there is the whole part of that really belongs to the domain of development aid, enabling micro work, because of micropayments are possible due to due to really minuscule costs. Therefore, micro work is actually makes sense, and it's feasible. There are a lot of savings and lending schemes that were existing before, such as VSLA, Village and Savings and Loan Associations, which are actually leveraging blockchain solutions and DeFi solutions to actually go beyond what they've been doing, and it's just increasing their capacity and work. And we have also parametric insurance, which we'll also look at in a moment. We have cash and voucher assistance, which is a form of cash assistance and cash transfers. So CVA and the voucher programming, it's often compared or similar to community currencies that have existed before blockchain technologies, of course, but have been used in also in that regard through blockchain and the sort of ecosystem of decentralized finance. And finally, we also have this very important use case of direct giving through this decentralized funding mechanisms, which, for instance, are opening up a completely new horizons and opportunities for projects such as universal basic income, which is again facilitated through that decentralized financial ecosystem. So let's look at real life projects, starting in the aid sector, starting with the direct cash transfers to Maasai communities. So this is a pilot that I happen to work on, and actually been there in Kenya. This is a project where humanitarian organization, Polish Humanitarian Action, working with their partners, have been introducing a form of cash transfers called Cash for Work, and doing that through blockchain-based decentralized finance solution, making it digital cash for work. So in this pilot, the blockchain that has been used was of Celo, which is very light and very fast. It's called mobile first, and therefore using the native stable coin CUSD, which is pegged to US dollar, so it represents the same value. And users, so recipients, participants of the program, being paid for the work that they've done, have been receiving that money, and then with the ability to exchange it into their digital mobile money wallets. So this is how this program looked like in a funds flow design. Celo Foundation, that has been a donor, has been funding that project, and through some operational and compliance difficulties for the NGO that was implementing this project, which is Polish Humanitarian Action and its partners, the money was actually flowing directly from the donor to recipients. Unlike in most aid programs, this is the NGO that is receiving the funds, and then they process the funds to different organizations and intermediaries. So very much like the financial system works today. And it has been actually changed in this pilot, in this project. So the organization NGO had this online dashboard where they basically upload the documents for disbursement. In other words, a payroll document confirming who qualifies for the payment. And they generated through that platform a smart contract, which is this one of the key elements of decentralized finance and blockchain technologies, that is basically automating a contract that is coded. And so when the NGO has uploaded the payroll and generated the smart contract, it only sends the donor information about the address of that smart contract, which is a string of letters. It's basically a blockchain wallet address, and the fund to be funded, the amount to be funded. And so the donor was funding this smart contract, and smart contract, after being funded, automatically triggered payments to participants' digital wallets, blockchain wallets that are accessible through USSD technology. So basically, do not require any smartphone. And then that allowed participants to then exchange it, to send it basically from that digital wallet that was still on blockchain to mobile money, which people in Kenya and throughout Africa are quite accustomed to, and all of those participants were users. So what that is actually, what's important in this regard is that as I mentioned, the money normally traveled across several entities, and in this case, using all those elements which are part of DeFi, we've been able to shorten that distance and bring the funds directly from the donor to recipients. So what that meant, apart from the goals of improving the livelihood, which are programmatic objectives, they helped to increase the costs compared to other programs, thanks to a very, as I said, very tiny fees that blockchain transactions incur. But crucially, the average time of delivery, so the whole operations of transacting and funding, even though it was happening between several countries, so Poland, California, US, and Kenya, so all of that was actually happening on average under 5 hours, with the fastest funding disbursement being just above 2 hours. So, and this is the operations that are happening between basically 3 continents. So this just shows you the power of that technology. So that translated into increased coordination, that as well as transparency and monitoring for the NGO, as well as the donor. And the solution has been designed to be financially and digitally inclusive for the participants who in majority cases do not have bank accounts, but they do have mobile money, so M-Pesa accounts. So the other project that I want to just talk about to show you what are the other possibilities and really the power of blockchain and decentralized finance is the parametric insurance for smallholder farmers. And just a bit of a background, this is quite an important metric. Just 3% of smallholder farmers in sub-Saharan Africa countries have agriculture insurance coverage. At the same time, this group is one of the most climate vulnerable group on the planet, and with the palpable effects of climate change, the crop insurance is actually necessary. The problems, however, with the crop insurance is that often it's too expensive, but the users, when they can afford it, do not really have trust in the timely and fair payouts, and there is also a problem of lack of transparency in solving the claims. So there has been just recently a pilot that was a cooperation between insurance provider Acre and funded by Mercy Corps and Ethereum Foundation and Chainlink Foundation, with the startup that is providing this blockchain insurance technology called Etherisk, which basically is introducing decentralized parametric insurance. Parametric insurance is a weather index insurance, and the solution that was tested in this pilot was integrating the smart contracts with the weather index insurance, which basically produced enabled that whole program to automate the claims, automate the payouts, and really decrease the operational costs, and therefore also building trust for future users and more farmers. So how that worked was basically by integrating the GPS satellite information that is basically what the weather index insurance is, with the smart contract. So whenever there was a trigger that would inform the smart contract that the payout that it classifies as the weather event that should confirm the claim, should then it automatically trigger the whole process of solving the claim, and automatically sending the payout to mobile money account of the farmer. So what the pilot actually showed is that the integration drastically reduced payout times by about 97%. That is from like an average of a month and a half to just 1 day. So you can see that this is a pretty substantial gain. It also automated. The automation also enabled and increased the coverage amount. This is also quite an important change, and this is due to low costs of the technology and savings created in the process of automation. Then the smart contract transparency translated to the increased trust, so more participants can report better, can just refer to their colleagues and other farmers, and then the improvements made through that solution led to improved quality of life, as this has been a pretty big pilot for several months, covering over 12,000 people. Those results were rigorously analyzed through impact measurement frameworks. So this is also quite an important information. So you've heard just a snippet really of two projects, and I know that has been very fast and a lot of information, but Just coming back to this opening question, how DeFi can transform the aid sector, there are several things that we can already observe through different pilots and different projects that are starting to also penetrate that sector. And this is something that I would like to again highlight. So the overarching transformation is really that all those tools and solutions that we'll see more and more often are building this decentralized financial inclusion through providing micropayments solutions, loans, access to savings, and community currencies. This is all a big umbrella of financial inclusion, or financial inclusion. In terms of the aid sector, what it does is also that improves the humanitarian access, as a lot of remote delivery of cash, which is often a case in different emergencies and programs, is the case. Remote delivery is possible because it's operating on those digital payment rails, and it can be all sort of controlled from one dashboard, which is unlike the current solutions within the current financial system. Then at the same time, what's connected to humanitarian access and what has been seen already in several countries is the protection from inflation. And in the high inflationary context, this is both a protection for the recipients, right, of the aid, but at the same time, it just protects and enables really those providing the aid or assistance to really make it valuable and keep the value protected, which is often not a case in the current systems. And some of those countries that are experiencing those kind of problems are Venezuela, Argentina, Zimbabwe, most recently Lebanon. So this is where also those kind of solutions are and have been already used, not always by the aid sector actors, but by the private sector and different organizations. All of that is really translating to a more efficient delivery of cash, of aid. It's faster, it's cheaper, it's much more efficient for the cash programs through those automations. And it enables also the real-time monitoring, which also translates to the efficiency gains. And it brings, because of the transparency of the transactions and the traceable supply chains, this really brings much needed accountability tool, also helping to prevent fraud. What's crucial in terms of the humanitarian agenda, agreed a few years ago at the World Humanitarian Summit, is localization of aid. And using those kind of solutions, humanitarian and development organizations can actually deliver much more direct aid and assistance through this decentralized modality, which can empower local NGOs and groups, which basically is the objective of localization, and not really holding the money through big NGOs. That's basically what this agenda is about. And finally, 2 points. It's really about building resilience, so empowering the local communities to become more resilient by providing them those tools and access to other forms of assistance and many different innovative solutions that they can access through that tool, which also translates to improving the preparedness for other emergencies. And finally, this is all creating a new sources and streams of funding as the crypto community brings new donors, and which we have seen in the case of Ukraine, where the amount of donations to Ukraine has been in the first weeks and months of the war comparable to those of big agencies. And then this direct giving right from peer-to-peer within this peer-to-peer network becomes much more efficient and real. And finally, it's very much connected to the aspect of remittances, which are in many of the countries of the global south, and the recipients of development aid are big recipients of remittances from families, from the communities in the diaspora, and remittances are one of the biggest use case here. So these are all different ideas and concept of really how we can say that the DeFi and those technologies, those tools are transforming the aid sector. But this is just, a tiny fraction of what really this, what we've seen in terms of blockchain for good solutions. Quite relevant in the recent and more mostly let's say hyped in the last and popular in the last year or so has been the whole subset of decentralized finance, or rather its new subset is maybe a good word, sub ecosystem called ReFi, which is short for regenerative finance. And this is really the an agenda of those decentralized finance solutions to become to create regenerative economy, and not one which is extractive as it's currently a case in the current financial system and economy. So it's really about creating a more regenerative, climate friendly solutions and ecosystems. And just to give you one idea, actually Celo blockchain, which we've mentioned in the case of this pilot in Kenya, has actually now been collateralizing its reserves of the stable coins, not only through other stable coins, but also half of the reserves are held in natural assets. So this is basically the whole new path or new territory of decentralized finance, whereas natural assets are playing a big role in sustaining the sustainable financial system. So I will stop here and try to leave some room for questions. And if we have a few more minutes towards the end, I would be happy to talk more about PositiveBlockchain, which is basically a gateway to learn more about those services. So this project, sorry.
Thank you, Maciej, for the great presentation here. Can you hear my voice better now?
Better, not really. But I can hear you.
Okay. There are two questions so far. The first one: what is the post-time? What are the post-time resources required to implement micropayment solution, the one that you mentioned? The second question is: how has DAOs been used in the aid sector?
Mm-hmm. Yeah. So we're maybe starting the second question. DAOs, for those not familiar with this acronym, stands one of the examples of blockchain technologies. And what they can do is essentially creating new form of governance where organizations can really be self-governing as as an autonomous. However, I do not. I really well in the aid sector. There is not many projects that have been using DAO, especially not by major NGOs who have piloted some other solutions. However, aid sector, both development, humanitarian, is not just limited to those. Actually, those technologies are enabling more civil society and grassroots involvement in the sector, changing a bit its nature. And one interesting project that I know of is called Curacao DAO. So Curacao, as for the country in the Caribbean, former Dutch colony, which is harnessing the DAO as a main sort of organization for the local economy, that is introducing its own currency, Kuradai, and so it's basically creating a DAO economy, which is quite interesting. So I would recommend to look into that. When it comes to the costs and times and resources required to implement micropayment solution, there is no one simple answer to that. The costs, the cost of the costs of using micropayments is close to zero, right? If you have your phone and internet, you can basically access all those solutions through decentralized apps that are available also through Google Store and Apple Store, and you can access those. You can have the decentralized wallet and basically work with those solutions and use the micropayments. So the costs for using it on the user side is really zero. The fees that are, for instance, in the pilot that I spoke about, the digital cash for work, the Maasai communities, the Maasai women who are being paid who are being paid for the work that they've done, they received it on their KotaniPay wallet. They access it through their phones, and the fee that KotaniPay is charging for its users for a transaction is 1%. So basically, and this is the only cost that the users incur. But then compare this to normal costs in the current financial service providers, and you will see even ones like M-Pesa, and you will see that it's quite a hefty fee. So it's much cheaper for then the community to send the money between themselves on blockchain from one KotaniPay wallet to another than between than to do it on M-Pesa, because each transaction has certain fee, and especially for micro transaction.
Thank you for answering these questions. We have a question from Raja. What is the ethical framework for this?
Well, it's well, I don't know what is sort of assumed by the question. I think the ethical framework for this has been a bit described by me in terms of the applications in the aid sector So yeah, so all those things that the sector has been, for instance, criticized for, or the agenda that it takes, to to really democratize funding, to localize aid, to be more inclusive of the communities that are being served by the sector, but well, by the agencies and by the providers. And I think the decentralized finance and all those solutions, because of the inherent um, capabilities and goals, right, of those technologies to decentralize, to really democratize and give access to those that didn't have access, is really that ethical framework, I guess. Because what those technologies do, they really take the intermediaries out, which is really challenging the power systems which we have seen, um, quite frankly, corrupting the world, and also corrupting particularly this sector, which really carries this colonial legacy with with itself. So uh, I would say that the ethical framework really is to deconstruct those systems that have very often, um, were acting as gatekeepers, and dismantling really the a lot of those legacy systems, and most most obvious most particularly in the financial sector.
And if I may add that it also provides an easier way for funding aid projects rather than the long tiring processes of international donors, right?
Yeah, exactly. So I mean, this pilot that I've mentioned, actually, um was was a case in point where the donor can actually, well, first, anyone can become a donor because of those solutions, because it just makes sense, um when you have the tools that are enabling, like, uh very, like, micro payments and transactions that are extremely cost efficient. So that's one. But two is that you really, as a donor organization, can have a much better, um, like, well, transparency, but also, um, you can introduce that kind of direct giving mechanism, where the NGOs that are providing aid, or agencies, they're really focusing on what they want to focus, which is the program objective. So they spend much more time with the communities, with the people, um, on the ground, rather than spending money on, all the back office and the financial, transactions, etc. Right? Because, like, all of that is taking time and money, and also program, and also, reporting, monitoring of all of that is actually a very big cost of development and humanitarian programs, right? Because the organizations are accountable to donors, and they need to use all of those possible, um, resources that they can use to show, what was the impact, to monitor that. And with digital technologies, where we are using digital currency, digital money that can be traced, we, especially in the voucher programs, we can empower NGOs and agencies to save all those resources, because they can actually monitor how this program is functioning, while protecting the privacy of the participants, but just seeing what transactions are being made at which types of vendors, so how people are actually spending, and so whether the program has been designed properly or not, and like how it can be improved. So all of that is really changing the dynamics of how organizations will be functioning in the future, and how money, how the funds flow will look like. So there's also a question on the influence on the environment and how it can be optimized. So this is actually a very common question, and also a big myth to deconstruct. Um, so as many of you know and heard, Bitcoin is as one of the use case cryptocurrencies, and one of the original use case of blockchain technologies, is using this mechanism, consensus mechanism, which is called proof of work, which basically requires that all computers participating in the network are producing a lot of energy to mine, to actually solve the equation in order to reach consensus. And so this requires enormous amount of computing power, and the bigger the network, the bigger the consumption. So this is what has been Bitcoin and cryptocurrency has been very, very loudly criticized for. And here 2 points. One is that this is not the only consensus mechanism. So there are many other mechanisms that are being used, and most importantly for this conversation and the DeFi ecosystem, the Ethereum being the sort of the original altcoin, has been using proof of work. However, the community has been working for the last year, 2 years, on moving and shifting Ethereum to proof of stake, and this transformation, this move is probably going to happen in the next 2-3 months. So this is going to drastically decrease the consumption, and probably create a very big incentive for the coins that are using the sort of energy intensive mechanisms. And the second point that I would like to make, which is which I don't actually right now have a source for on hand, but there has been a study published recently, which shows that even though that Bitcoin is having this very big environment footprint, which is very much like unintended, it's still, the whole cryptocurrency ecosystem has much lower carbon footprint than, let's say, Visa or MasterCard. This just shows you, the proportions and the scale of what are we actually talking about. And one of the reasons why this is a case is because, yes, you may have computers in case of Bitcoin that are consuming a lot of energy, which has a big, quite unbalanced footprint, but you don't have any other carbon footprint associated with running business, with running operations, businesses, all the people, Visa and MasterCard, right? Or banks. They are huge institutions, creating a lot of its own footprint that is not maybe direct to a transaction, but overall it's what creates also enormous carbon footprint.
If I may add, before we take the final question from Nibal, the other blockchains, like for example XRP Ledger and XDC, they like much better than Ethereum and Bitcoin blockchains. And the cost of transaction is far better than also Bitcoin and Ethereum. Like for example, on XRP Ledger, the cost of 88,000 transactions can be $1. So it's far better. And XDC, the Zenfin blockchain, it's even much cheaper than that as well.
Yeah.
Nibal's question, how do these factors, for example, smart contracts, positively affect the data quality specifically?
Yeah, well, this is a great question. Well, I guess they very positively affect the data quality because it's all immutable, right? So, I mean, smart contract. I mean, it's basically leaving the data as it enters whatever transaction. So if there is a mistake in the transaction, right? So then it's that transaction still processes that wrong data input, but the data quality is protected by virtue of being immutable. So this is the highest, I guess, form, like, quality of data, because this is the nature of blockchain technologies, that you cannot really change whatever data is processed, stays on the blockchain and stays there forever.
Thank you, Maciej, for the insights and the great presentation. I will be sharing the recording later on the in the comments of the event. And if our guests still have questions, I ask them kindly to address the questions to you in the comments, so we can get more interaction afterwards. Okay. So
yeah.
Yeah, go ahead.
If I can, so maybe just that will be probably also helpful for the audience. So PositiveBlockchain is a global community that I'm happen to be a part of, and I'm on board of the PositiveBlockchain Association. We are an open database and a media platform, but really a community that explores the potential of blockchain technologies for social and environmental impact. And the database, open database, is growing, and now we are collaborating with several universities that are validating and sort of cleaning this data. It's one of the biggest, if at a time it was the biggest, now it's hard to keep up with the growth of that sector, but it's one of the biggest database of impact blockchain projects. It's open, so you can access it and download and contribute. You can add projects, and what we do is also create and collaborate on many reports, events, and projects, research projects. Last year we published a blockchain and the SDGs, so Sustainable Development Goals. I really invite you to have a look at it, and if you have any questions, you can contact us. So yeah, that would be it. Thank you.
Great, thank you. And I invite NGOs as well to make use of this great resource, and also to approach you if they have questions on how they can use blockchain technology for aid. So thanks a lot. Thanks again, Maciej. I will stop the recording for the first session, and then I'll start it again for the next session with our distinguished guest, Mr. Ahmed Manzoor.